All right, folks, welcome back. Long time no see. Section 2 of Trading All-Time Highs. Price preparation. We're going to keep this introduction very short, okay? Price preparation, in short, is it's when price prepares. I don't think I have to, explain. You're a genius, right? You can understand that. Price preparation. You remember the immediate rebalances and the liquidity injections, basically, the normal behavior of all-time highs that I told you before, right? And normally, when you see all-time highs, it'll tend to trend higher or, go higher because I don't like really using the word trend because it's very retailish, but you get the point. Whenever price is usually going higher at all-time highs, because that's the only thing it can do, like I said before, is you would normally not see it be so aggressive. But in this Trump market, it's pretty aggressive. So normally you would see immediate rebalances, liquidity injections coming back down to rebalance with the excuse of an immediate rebalance and stuff like that, right? But without that being in play, there's another way that price prepares, and that's called price preparation, obviously, right? So when it comes to price preparation, the one thing that price will do, if it cannot, listen to me, if it cannot create immediate rebalances, because that's the primary thing that drives price higher at all-time highs. Because as you can see here, if we go back to the daily, okay, you can see right here. If I can do it, immediate rebalance, and I think there's one more. Well, is that one? No, but you get the point. Immediate rebalances drive price higher during all-time highs. That's the primary method of price going higher. Okay. Now, since you understand that, and I've drilled this into your head and you understand that now, whenever immediate rebalances are not being created, okay, and since that is the primary excuse that the algorithm uses, because, like I said before, when we're creating an immediate rebalance, what price is literally doing, let's like draw a little candle here and then draw another little candle there, or we got this little candle coming back down. What's happening here, right, is, oh, I made that candle a little too big. Hold on. There we go. Pull that one out just a little. What's happening here, literally, is you are seeing price come back down. It's opening and come all the way back down, rebalancing this entire candle. That's why it's called an immediate rebalance. It's literally in the name. So price is going up, displacing, going up, going up, going up. And then you have price opening up and immediately, which is in the same candle, immediately coming back down to rebalance that candle's range right there. Because what? There's movement. There's bullish institutional order flow. There's movement higher. There's displacement higher in that candle. So it's coming back down to immediately rebalance. That's the main excuse because why? First of all, it's one of the rules in the algorithm. The second most important rule, it's rebalancing. Okay. And since it's rebalancing and it's actually creating a signature that is very, very powerful, it doesn't really need to seek liquidity because in an environment like this, you're kind of sort of seeking liquidity. Because if you think about it, you never know. There could be hidden pending orders up here, like a pending order right there, pending order right there, pending order right there, pending order right there. Because when we're going up, we're creating value. We're adding more value to the NAS. We don't know how far or how much value we've added to the NAS since then. Percentage wise, we've added 15%, right? Percentage wise, we've added 15%. But dollar amount, it could be in the trillions, the billions, the hundreds of billions, the 10 trillions. You never know. So since we're doing that, we're basically seeking liquidity. So the seeking liquidity rule is already thrown out the window. So the last two are what? Rebalance and balances, which is, the immediate rebalance. That's the excuse for actually successfully doing the second most important rule out of the three rules of the algorithm. And then you have the last rule, which is rebalancing to equilibrium, which is the least important. Is, if you're in a dealing range right like this, right? Well, let me get rid of the stupid pending orders that I put on the chart. Now, here's the dealing range, right? If you see price, let's say, how can I draw this? Let's say from here, then I can like copy it and then paste it and then drag it up. And then okay, I might just cut this out. Yeah, I'm gonna cut it out. Just give me a second. Okay, I tried my best, but I did it. This just looks like a bunch of random boxes, but you get the point. I did it. So this is the third rule, which I don't have to explain this, but I want to explain it for the people that are new and probably skipping sections. Say, what if I skip a section? The third rule is, for example, we got a dealing range from this low right here to that high. Okay, price comes back down to the equilibrium of the dealing range to rebalance to what? Because we're rebalancing everything that's in this swing up here, and coming back down to the equilibrium of that swing. So that's rule three. Pretty simple, right? Now let me delete all these drawings. Oh man, all my drawings are gone now. But you get the point. If immediate rebalances are not present, it's going to resort to price preparing itself in a totally different form in which I don't know the name of it. ICT might have came up for a name of it like 15 years ago when I was like 1 years old. But anyway, this is because the immediate rebalance already does everything it needs to do to continue going higher. It completes one of the rules of the algorithm. And then what really covers that first part I just said, which is doing one of the rules of the algorithm, is it making a signature, which is the immediate rebalance, which drives price. It actually gives price that drive. Remember, I said the immediate rebalance is literally one of the strongest signatures that the algorithm can ever form. When it makes that signature, it's like about a how can I say it? It's like pulling back a slingshot like super super far back and then letting it go, and price just jumps higher. That's basically what it is. So it kind of reduces the amount of rules that it needs to fulfill when it creates an immediate rebalance. That's why you're only going to see price rebalance or complete the second rule of the algorithm and then actually have that momentum after the immediate rebalance because we're already seeking liquidity. So that rule is out of the question. And then all we have is the third rule. Why can't we do the third rule? Or why not? Because the immediate rebalance already gives price that momentum and that what's the word? That oomph. I can't really get that out because I got Invisalign in, but that oomph to go higher because it's the strongest signature. So it doesn't have to come back down and do all this and do all that. So it can go higher because it already has the momentum and the drive and the reasoning to go higher. So anyway, I did enough explanation of what price preparation is and why it's there and how it forms and why it's needed. Because without immediate rebalances, you get the point. I already explained. I don't have to explain any further. So let me go to a point on the chart, right, where immediate rebalances stopped getting created. So let's see. Is there any some? There's one around here in which, as you can see, price jumped through the roof on that day for how many points? For 900 points. Wow, that's pretty clean. But you get the point. Immediate rebalance, immediate rebalance. We had prices jumping through the roof, seeking all-time highs over here. And then we had one immediate rebalance, two immediate rebalance. And I think there was a third one up here somewhere. But yeah, you get the point. A bunch of immediate rebalances. But remember, it's the daily and the 4 hour that you want to look for this stuff for, or that you want to look for immediate rebalances. The daily and the what? The 4 hour exactly. So looking here. Hold on. Let me get you. Let me get. There we go. You got immediate rebalance right here. Then we have almost an immediate rebalance right there. We have an immediate rebalance right here. We have another one right here, which kind of sort of failed to deliver, but it still delivered it. It was a little weird the way it did it, but then we have another one. No, no, that's not another one right there, but you get the point. Another one right here, another one right here, another one right there. Then you have another one right there. And I think there's some more around here, but I'm just really not looking. And then where we really stop the immediate rebalances and like fail to deliver them is right around here. Right around this area right here. This is when we really stop. And if you want to go to the daily to see how that looks, here's the daily. This is how it looks. Okay, so right around that point is when we stop the immediate rebalances. Now you notice as soon as we stop the immediate rebalances, the structure starts to change. It's not as aggressive anymore and it's definitely slower. Just look at the candles. As you can see, when there was immediate rebalances all throughout this run here, it was primarily bullish. You only see white candle there, white candle there, white candle there, two white candles here. But as you can see, it's still clearly going higher and with a lot of magnitude. Just look from here all the way to here. That's 5,000 points. That's gigantic. And compared to this here, well, let's just look at how long it took to deliver 5,000 points from here to here. It took 39 days. Okay, 39 days. Now, from here, right, it delivered 2,000 points in 15 days. Okay. So it delivered less than half of what this delivered in almost half the amount of time that it took to deliver those 6,000 points. So basically, what I'm saying here is it's slower. After the immediate rebalances were stopped, or weren't getting created anymore, price was getting slower. Why? Because it's preparing itself. Now, price preparation is when price or outside of the immediate rebalances, there's something called price preparation. I don't really know a specific name for it. I'm just, saying what price is doing because it's preparing price. You get the point. But what it'll do is complete one to two rules of the algorithm. Okay. And that is either seek liquidity, rebalance imbalances, or hear me out, or rebalance the equilibrium. Okay. You're probably like, but then we just say if immediate rebalances are there, then we won't have to seek all those rules and probably only do one because when an immediate rebalance forms, we're already completing one of them and we have the momentum to go higher. Well, like I just said, after this point, do you see any immediate rebalances that are working here? Not really. Not really. Are they really, really delivering higher? Not really. No, definitely not at all. No, I don't think so, right? Because I don't think so, you don't think so. We come to an agreement that immediate rebalances don't form here. So price has to prepare a totally different way. When it is preparing, the one thing that it must do is complete 1 to 2, okay? 1 to 2 rules of the algorithm. It can be um, any 2 out of the 3, okay? It can be seek liquidity and rebalance to equilibrium. It can be rebalance imbalances and rebalance to equilibrium. It can be rebalance imbalances and seek liquidity. Just any of those 2, or really 1 to 2. You mainly see it do 2, but sometimes it can be 1 if it does something else after that. So let me show you what I'm talking about. Okay, let me just show you. So we have this dealing range here, after you see right here, came down, purged that low. So we have from here to here, right? And then we have that low right there. So what's the 2 things or the 2 rules that are being completed here? Let me mark this as sell side because oh, see, I always mark it everything other than sell side. Okay, there we go. I finally got it. I can delete this line because, anything after this is, no more immediate rebalances are being created. So what is the 2 rules that price is completing here? You would probably say, oh, it's rebalancing imbalances. Is there any imbalances in here? Barely. There's these 2, but they're too minuscule. They're way too minuscule to say that prices having imbalances or really displacing at all. It's way too small. You can clearly tell that it's rebalancing itself as it's going higher, in which this fair value gap gets created, and then it does rebalance that fair value gap almost instantly. So you get the point. That rule cannot be created here. The only 2 rules we have left is what? Rebalance to equilibrium, which is right here, and seek liquidity. Now, when I say seek liquidity, in this case, it'll be specifically sell side liquidity because we're talking about all-time high conditions. And are we at all-time highs? Clearly, there's nothing back here. So clearly we're at all-time highs. So when I say seek liquidity, is going to be seeking sell side to keep going higher. Duh, right? In which it does complete both of those rules. Correct? It does complete both of those rules. Now, when it is completing both of those rules, there is like a 99% chance that it's also doing something else to give you more confirmation and clarity about what price is truly doing. So you can see that we came up all-time highs, accumulated a little bit, had some sort of liquidity injection, came all the way back down to rebalance this swing here, and then purge liquidity right there. You get the point. Understood? Okay, it's overstood. After that, we form a what? An intermediate term swing. Wow, see that? Pretty cool, isn't it? We got short-term low, short-term low. We got a deeper low in the middle. That's an intermediate term swing. So price is not going to hit this. So you're probably like, okay, it prepared itself by completing 1 to 2 rules of the algorithm. It created an intermediate term swing after completing those rules. So that's another confluence that price may be reversing or making higher all-time highs from here. What else is it doing? Well, let's check the daily or the weekly. Well, probably not the weekly because it's a little too high, but you get the point. Here we go. We're up here. Now, notice this order block. Do you remember institutional order flow? I taught that. This confluence or that what's the word? That concept is very, very emphasized and I would say exaggerated up here because there's a lot of institutional order flow and interbank intervention that's going on up here. So this order block, just pay. Let me, you know what? Let me not even do that. Let me delete the sell side liquidity because we already know what happened there, and the premium and discount because now we're focusing on the confluences after or the real preparation. This is the real preparation of the algorithm after it completed its main objectives, which is the 3 rules of the algorithm. So quadrants, and then we're going to go back down to the 4 hour and reset. Now let's really look here. I'm having a bit of a stutter because I got these things wrapped around my teeth and they're squeezing them and it hurts. But I'm still going to teach it because I'm not one to say, oh, my teeth hurt. I'm not going to teach. No, no, no. I'm not. No, we're not doing that. I got to teach no matter what. So when the intermediate term swing was created, we had that high probability order block. Why? Why was it high probability, JJ? Well, this on this time frame, this is really a propulsion block. Well, no, that candle right there is a propulsion block, and if you want to draw that out too, I could probably just add equilibrium to that. But where's P and D? There it is. So this might look a little confusing, but let me remove the borders from this one, and that. So that equilibrium right here, this line right there, is the equilibrium of that propulsion block right there. Okay. So there's a lot of things going on here. we have this entire daily order block being respected while it is preparing. Well, the preparing part is both it accumulating at this order block, but I would say before it really, really prepares, it has to complete the 1 to 2 rules of the algorithm. So that's not really a part of the preparation because it's required to do that. This is just really price preparing to go higher because it is coming back down, respecting this order block. The algorithm is offering institutional what's the word? Institutional buying right here at this order block. So it's like we're respecting this upper quadrant. One, two, well, really one, two, three, four, five, six, seven. Huh, six, seven. But you get the point. It's respecting the upper quadrant, hitting the equilibrium, hitting this propulsion block's equilibrium that formed within that daily order block. So there's a lot of opportunities and chances for the institutions to hedge here, right? The algorithm is clearly offering that. Does it offer that? And, does it get that? Yeah, it clearly does because it goes higher. And then we have the confluence of that intermediate term swing forming there. Now, remember, intermediate term swing, long term swing, and short term swing. What is that considered? Institutional market structure. Now, you have institutional market structure forming at a high probability institutional reference point. So what does that mean? That the institutions are hedging here. This line right here, that intermediate term swing would not get created for no reason. You see the correlation that's going on here? Just put the pieces together. This swing would not form randomly, but the fact that it formed at a high probability order block that had displacement following it, in which price started to fail the immediate rebalances and not create any after this point going forward, but after we, started or stopped creating immediate rebalances, we reached all-time highs, failed to go higher, came back down, did our two requirements, which is rebalance the equilibrium and seek the sell side down here. After we did that, we proceeded to prepare, in which another form of preparation is hedging to the institutions, in which the institutions are like, okay, let's prepare our orders, which is hedging. If you don't know what prepping your orders is or accumulating orders, it's literally called hedging. That's an institutional term. So we came down here, hedged 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You get the point. And then we had that intermediate term swing form right after we hit the deepest point that we could possibly go to. The deepest high probability reversal point, which is the equilibrium of that propulsion block that forms within, listen here, that forms within that daily order block right there. Is this random? No, no, definitely, definitely not random because I just showed it to you. I just explained everything and clearly, 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 it is not random. Understood? Now, I could just stop it here because that example alone is enough to understand price preparation. But in short, just to give you a little recap, because I am going to end it here because I got a tournament coming up in literally 30 minutes. Because I don't know if you guys know, but top 100 Brawlhalla player. I'm not LARPing. I'm not LARPing. But price preparation, in short, is first before it even prepares or starts prepping price. I can't really, it's like a tongue twister. You get the point. Before it actually starts prepping price, it has to complete 1 to 2 rules of the algorithm. Normally, it's 2. Normally, it's 2 because, the preparation after that, which is hedging out of order block or time distorting or, what's the word? What's the other word? I'm trying to find it, but you get the point. There's a bunch of different ways or forms of preparation that it can offer before it actually delivers the narrative. Now, actually, I was about to say I was gonna end this video here, but I literally cannot. Because guess what? Let me just go to my document or everything that I have written down. Right here, we are applying common behaviors of all-time highs. We are right here. We're right there. Understood? I have all of this to explain, in which I totally forgot to explain. So no, we're not gonna be ending the video here, in which I might just cut that whole explanation out, or I might just keep it going. Anyway, what I was going to talk about next, right, is elongated and shortened price preparation. Meaning, price can prepare over the course of minutes, hours, days, or even an entire week, which is likely the maximum. At all-time highs, you're likely going to see it prepare for the maximum of a week. Okay. I think I might make two parts of this. I don't know because price preparation can be used for when price is under all-time highs too and at all-time highs. So I might make like a part 2 to this section 2 to explain the under all-time highs part, which will be outside of the trading all-time highs little mini series, but I'm gonna have to explain that in a different video. I won't go over the under all-time high conditions in this video. But elongated and shortened price preparation. Now watch this. Let's see if I can find a little example here. Okay, so right around here, we had a little mini period at which immediate rebalances weren't getting created anymore, or price started moving so much to where immediate rebalances could not be created anymore, which is around here, I think. Like, yeah, right around there. So after that point, there was a little interval in time where immediate rebalances could not be created anymore because it was just going too high and it would take too much time to come all the way back down immediately to create that immediate rebalance. You know what I'm saying? So let me zoom in here. Just look at the price action here. Look at the price action. You see how before that line, price is very steady. It's steady and it's going higher. It's not really having too large of pullbacks or not staying too much. We're not spending too much time coming back down. It's very, very short, stubby, and going right back up. Short, stubby, going right back up. But after that, when price is really, really going higher, immediate rebalances can't be created anymore. And that's one thing I forgot to mention. When you see price really, really going on a rally, and which is going to eventually do that once it's prepared, once it has enough rebalancing and enough what's the word? Immediate rebalances that's created and it's really ready to go higher and it's prepared, you're gonna see price going like a little 1,000 point rally or 500 point rally or just a rally in general that is very aggressive and non-retracing and barely offering a retracement in general. So when you see that rally, there's definitely going to be a point in time where almost no immediate rebalances are going to be created during it or after it. In which, if you do see any immediate rebalances within that rally, it'll be on the 4 hour, in which that example is right in front of our face because look, there's an immediate rebalance right in front of us. But primarily, you're going to see the immediate rebalances stop on the daily, in which on the daily is where the immediate rebalances are the strongest because it's the daily. It's a higher time frame. So obviously they're going to be stronger, right? But anyway, going back here, let me pull this up to where you can actually see it, but to where it's not too close up on your face. That's good. Yeah, I think that's good. Now, after this point, there were no more immediate rebalances that can get created because you had this little rally right here. So it just couldn't happen. What price had to do, right, is prepare. How? How could it prepare? Well, we had this dealing range here. We're like, oh, here we go, the dealing ranges. Just hear me out. Just hear me out. Just hear me out. Just hear me out. You got this dealing range here. And then we have this imbalanced swing here. On the hourly, there's a bunch of imbalances right here. Like a bunch. I'll show you on the hourly right now. It's like a bunch of imbalances right there. Let me pull that up. Well, not a bunch, but there's imbalances in there. So, as you can see, we got 1, 2, 3, 4. You get the point. This swing is imbalanced because it's delivering higher aggressively, leaving behind imbalances. In which I can just stay on the 4 hour. I don't need to go back to the I can stay on the hourly. I don't need to go back to the 4 hour to explain this. But as you can see, we rebalanced this swing here, which is the second rule or the second most important, which is rebalancing imbalances. And then while we were doing that, we were also rebalancing to equilibrium of that dealing range. So one to two of the rules have been completed, right? Now a price just has to prepare. How is it going to prepare? Now, when I say how, I don't mean when I'm giving you these scenarios, this is just looking in hindsight. Reminder, I'm not literally saying look for this or look for an order block to get hedged at or look for time distortion or look for this or look for that. No. No, 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 no. Definitely do not do that. You have to adapt and look at it with with some form of versatility after it's completed the 1 to 2 rules because that's a requirement. That's just a requirement, but it's just going to do the rules a little differently, and that's why I had to add that part to price preparation because it's going to deliver them and do them a little differently and maybe prepare while it's doing it. So there's a lot of different characteristics to price preparation in general, but there's a lot of scenarios and a lot of different stuff that's going on here in which price is preparing for. I'm not saying look specifically for this, look specifically for that, and look specifically for this. Whenever you see that immediate rebalances are not really being created anymore on a daily, this is where you switch to the price preparation protocol or whatever you want to call it, or the price preparation mindset protocol or steps, whatever you want to call it, right? That's when you want to switch to that. When you switch to that and you see price clear as day, you mark your dealing ranges, you see price seek liquidity, you see price rebalance to equilibrium. Once you see that and you got your dealing ranges and all your rules actually marked out to where you can see that prices successfully completed them, that's when you switch over to price preparation and see and actually look at current price action and previous price action, mainly within the same week or past couple days, and say, what is actually happening? Let me actually look at price and see what is going on. What is actually happening? Because you remember how I just said, like literally like 30 seconds ago, that when price is fulfilling the two rules or one to two rules, it can be preparing or it can prepare while it's doing that. Watch this. Let me go back to the 4 hour. I'm actually going to need the 4 hour for this. Actually, I didn't think I was going to need it. Let me delete this line right here. And do you see this right here? See that? You see that? What is this? What is this candle? If you said an order block, you are kind of correct because it's a type of order block, obviously, right? But look, you have to look. If you're identifying an order block, you have to go back to see what type of order block it is because it can either be a propulsion or just a regular order block. So let's look back. We got this down close candle here, gets violated. We got this down close candle here, gets violated again. And then we leave behind this order block that never gets violated. As you can see here, does it ever go below that candle's low right there? No, so it never gets violated. So this is an order block in which we have this candle, which is the candle I was just talking about, digging deepest into that candle right there, creating a what? A propulsion block. Exactly. So since we have a propulsion block right here, we can draw that out, or let me just draw it out as a box. Oh my God, support and resistance boxes. Oh my God, support and resistance, guys. Where is propulsion? Okay, there we go. Propulsion block. Now, if you take a look, when it fulfills or completes or successfully, whatever you want to say, completes those two rules, you can see that price begins to accumulate or bounce off of that propulsion block while it completes or right after it has completed the rules of the algorithm that it needs to complete. So it is knocking out its objectives and preparing. How is it preparing in this scenario? Because this is nothing specific or saying, look for this. It is hedging at this order block. I mean, not order block, but this propulsion block, in which I think this is on the daily too, but I'm not really sure. I can go check for you. Let me see if this is on the daily. Oh, yep. Oh, wow. Never mind. It is a daily propulsion block. Jesus Christ. Okay, so let me just remove this drawing real quick. Hold on. It is instead a daily propulsion block. So if you want to replicate that price action that was on the 4 hour, or if you can remember it, when the immediate rebalances stopped, which was after this rally here, we started to slow down and actually say, okay, we can't create any immediate rebalances right now. So let's actually take our time to prepare, reference some order blocks or propulsion blocks, give the institutions an opportunity to give us liquidity so we can keep going. This is the algorithm talking, by the way. We're going to let the institutions hedge into our order blocks that we reference to, which is this propulsion block right here. We drop down into it, accumulate one, two, maybe a couple more times on the 4 hour. You get the point. So once they buy into that order block, we have the liquidity to say, okay, let's keep going. Okay, let's keep going even more. Okay, let's keep going even more. Okay, okay, okay. You get it? It's not that hard. It's not that hard. But price also prepared even more after that propulsion block. Let me show you. The more preparation you see, I forgot to say this, but the more preparation you see, the less amount of preparation it'll have to do in the future. In which there is about, let me see, one, two, 3, 4. It's just a whole bunch of preparation going on here, in which the more elongated it is, meaning the more days it takes, specifically, I'll say days, because when all-time highs, multiple hours of preparation really isn't enough to make a long rally over the course of multiple days, because a long rally for all-time highs will mainly be printed throughout the week. So when I say elongated preparation, I'll say over the course of multiple days of preparation, starting from, this day right here, which is what day is that? I can't really see it at the bottom of my screen. Wait, what day is it? Let me mark that. That's Monday. So from Monday all the way to what's this right here? To Thursday. What is that? 4 days? 3 to 4 days? 3 to 4 days of elongated preparation will give you a large rally. You're probably like, where's that large rally, JJ? Where's that large rally? That barely has any preparation. Well, if we scroll over, it's right there. How nice is that? So, the more elongated preparation you have, I'll say at the maximum of a full week of not printing all-time highs or barely printing all-time highs and actually having rallies, you're gonna see a rally coming soon that barely has any preparation. Like it's just going up, going up, going up, going up, going up, going up, going up. Now, what kind of preparation is going on here? After, let me go to the hourly because I think that preparation, from what I remember, formed on the hourly. Yes, it did. We had one. This is the first day. Then we had the second day. We had FOMC coming back down to rebalance the equilibrium of this swing. Then we had it accumulating at that order block there, and then at that breaker right there. You see that candle? That bullish candle? We have a breaker and an order block right there. So it's accumulating, literally accumulating inside of that. What's that? That's a good thing because it's respecting it and accumulating. It's accumulating while respecting it. It could be accumulating and disrespecting it, which is a bad thing, but it's a super, super, super good thing that it is accumulating and respecting it. That means orders are being accumulated at this order block and at that breaker. Not random at all. So as you can see, this happens over the course of, let me see, over the course of basically 3 days. You can see the 3D next to the 6 and 9 bars right there. I don't know if you can see that, but oh, I can just click it. But you see 69 bars and then 3D, that's 3 days. So that's some elongated preparation. I'll say anything over a day of preparation and price just not creating all-time highs, that's elongated. The longer it is, I'll say up to like I said, up to a week or more than like 2 to 3 days, that's pretty elongated. And you're definitely going to see a large swing next week because you don't need a lot of preparation for price to really, really go. So I'll say 2 days is good enough for you to see like a good movement like this. But since it was 3 days, it was even more powerful and just more aggressive and higher magnitude. Just take a look. After we broke out of it and really started going higher. Oh, wait, let me go up here. Like right around here. Look at that. The entire next week after that, delivered 1,700 points in what, 7 days? That Jesus Christ, that's insane. You know how insane that is? Since this was a 3-day preparation, the rally continued outside of a single trading week. Like I said, it took 7 days, in which a trading week is what? 5 days. So I'll say 2 days of elongated preparation and then actually doing stuff and you actually seeing it prepare. Maybe give you like a week of a good rally, maybe 4 days of a good rally during the next week. 3 days, maybe a maybe like an entire week moving on to the next week, maybe like another 2 days into the next week expansion, like a 7-day expansion as we just saw here. You might see that. But if it's like a full week of preparation, that's kind of like a warning sign. A warning sign that price is either slowing down or that you're going to see like a crazy expansion. So that's when I will say like 4 days to a week of preparation. That's a little bit of a warning to say that price could have like a very, very strong rebalance or very, very strong retracement into price, in which that literally just happened recently. Like literally. Hold on, let me show you. That literally just, yeah, look at that. So we have, let me just show you. This is a perfect example. So we have basically 10 days of preparation. You're probably like, how, JJ? It's going up. Remember, if it wants to seek all-time highs, it's going to seek all-time highs aggressively. So is it really doing it aggressively here? No, it delivered what? How many points? 1,000 points only over the course of 10 days. That's nothing compared to this move right here, which is 1,700 points, or yeah, 1,700 points in a matter of 8 or 7 days. That's nothing. So we can clearly see that price is slowing down here. It's preparing while going up. As you can see, it's accumulating at order blocks, purging liquidity, rebalancing. It's preparing within this entire range here, but look how it's going up. That's why it's called preparation. Since it's preparing over the course of basically an entire trading week and not going up, that's a little bit of a warning sign. That's a little bit of a warning to say that price is preparing, but it's not following up with what it's prepared for. So be careful and be very cautious because you're walking on thin ice. Price could definitely reverse, in which it yeah it yeah it definitely reversed. It reversed very, very aggressively, like from here, almost 2,000 points in a matter of how many days was that? In a matter of a day. That's yeah. So I think my point has been proven in front of your face, and yeah, if you do see this, okay, it's preparing but barely going anywhere because if it prepared for more than a week, you're going to see a crazy expansion like through the roof, like 2,000 points in a matter of like 3 days. You normally would see that. But if it's not doing that, that's a warning sign. Or that's literally a siren blaring saying, we might be reversing, so be careful. So definitely look for confluences or potential shifts in market structure and basically concepts and confluences and understandings to say, uh-oh, we might actually be reversing here. Because if you look here, you first see it at that break in market structure. That's when you first notice it. When you secondly notice it is when you see it retrace all the way back up into this order block and actually respect it and go lower. When you start to notice it really is when it runs all the lows here. When it runs all the lows down here and starts seeking sell side liquidity, that's a problem. Because remember, at all time highs, when you're seeking all time highs, we're not going to seek sell side because buy side liquidity is already being sought by creating all time highs. So when you see these lows get broken, you're like, okay, now we're really gonna go lower. Now we're really going lower. Because that's why people have been saying, oh, we're seeing so much sell side liquidity getting edged. Because we don't need to seek it. We don't need to seek it. Liquidity is already being sought by going higher and basically seeking both sell side and buy side by creating all time highs because you're just universally adding more value to the market. So we don't need to come down here because we're already seeking buy side. You're probably like, but before we seek buy side, doesn't price need to come out and take sell side? In this scenario, no, because it price's primary objective, which I described in the previous section, is go higher at all-time highs and keep printing all-time highs, period. Okay? And if price is prepared in the form of an immediate rebalance on a daily and or 4 hour, or if it doesn't create immediate rebalances, it's such a tongue twister after saying that like 20 times. But if it's not creating immediate rebalances, it'll begin to just prepare itself in a different form, which is, price preparation that I just explained in this video for the past 40 minutes. This is a very, 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 very long recording. But yeah, you get the point. I just explained price preparation very, very deeply. So if you ever wondered why sell side liquidity is getting edged a lot, you just learned why. And I hope this was a very, very insightful section to say the least, because I did teach a lot. 40 minutes of me yapping and stuttering and having stutter steps and almost coughing my whole lungs out from talking. You get the point. I'm just spent a lot of time in which I do have 15 more minutes until my tournament starts. Anyway, this is a trashy outro. This is the end of section 2 of trading all time highs, price preparation, and I'll see you in the next section, section 3. Good luck and good trading.